terrible thing for me to say. I'll probably get in trouble for saying it, but I'll say it. I feel like the central banks of the world have been drunk driving with our currencies. Over 2025 and into 2026, there'll be thousands of Wall Street professionals, either salespeople, financial advisors, or marketing consultants that will be explaining the value of Bitcoin to lots of different types of investors. Individual investors, retail investors, high net worth investors, family offices, institutions, endowments, pension funds, things like that. So I imagine over the next 3 to 5 years, there'll be greater adoption. And with that, because of the fixed supply, the very limited supply in Bitcoin, I think the prices are going to go up a lot.
Scaramucci envisions Bitcoin evolving into a standardized global currency. He emphasizes Bitcoin's decentralized nature, free from the influence of central banks and human error. Unlike fiat currencies, which are vulnerable to manipulation by policymakers, Bitcoin's algorithmic foundation ensures transparency and predictability. He criticizes central banks for their drunk driving approach to currency management, where excessive printing and artificially low interest rates harm the economic standing of the most vulnerable populations. For people in regions with volatile fiat currencies, such as Venezuela or parts of Africa, Bitcoin has already become a refuge. Scaramucci calls Bitcoin a tremendous store of value, especially in economies plagued by hyperinflation, as it allows individuals to safeguard their labor and energy in a portable, durable, and non-inflationary asset.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Looking at the world, and I'm looking at our debt-laden society, I mean, you think about governments that are holding a lot of debt, meaning they've asked people of the world, the capital markets, to lend them money to fund their expenses on an annual basis. And so in the case of the US government, it could be anywhere from $1 trillion of borrowings to $2 trillion of borrowings. And so what ends up happening is when you get into a debt-laden society like that, the governments have a tendency to weaken their currency so that they can monetize the debt. You know, they'll pay back the debt with dollars that are worth less than the ones that they borrowed, and that's essentially what inflation is. And so we've seen a lot of inflation post-COVID. It's a little tamer right now. But if you really look at the economics of the welfare state in the West, it's going to put a lot of pressure on these fiat currencies. And so Bitcoin, I think, could eventually develop into a standardized form of global currency in a weird way, because it has no central banking community. You're sort of removing human error from Bitcoin. You know, it's so decentralized that you won't have any one person that could actually tweak Bitcoin or harm it in some way. You know, and it's a terrible thing for me to say. I'll probably get in trouble for saying it, but I'll say it. I feel like the central banks of the world have been drunk driving with our currencies. You know, they put too much of it into the system, or they weaken it with interest rates that are artificially low, and it damages lower and middle income people because they make their money off their time and their sweat. You pay them $1,000, but you take a year and have 8% inflation, they only have $920 worth of purchasing power. So Bitcoin, as many people know in Latin America, many people know in Africa, can be a tremendous warehouse, can be a tremendous store of value to protect people from that inclination that sovereign governments have. And so for this reason, I'm super excited. When politicians are linked to the central bank, they have a tendency to corrupt the currency. And so throughout the world, whether many parts of South America, as you're referencing, or parts of Africa, people lose faith in the currency. The currency gets highly inflated. They get paid, let's say, in pesos, or they get paid in rubles, or peseta, you pick it. They get the money, and then the money is less purchasing power by 10%, or less purchasing power by 20%. And so it's almost harder to understand the value of Bitcoin in a country that has more stable currency. You know, in South America, places like Venezuela, you're like, okay, I need a store of value for my work, for my labor, for my energy. I need to transfer it into a different form of energy, something that's hard money and something that I can take with me. It's easily portable. And so for these reasons, Bitcoin adopted, frankly, faster in the non-developed world, or sort of the emerging market economies of the world. And it took a little bit longer in the United States. But I think we're there now. You know, companies like Fidelity, BlackRock, Van Eck, you know, Ark Asset Management. There's probably 13 or 14 large-scale asset managers that have a Bitcoin ETF in the U.S., and I think that's increasing the adoption. One thing that Wall Street's very good at is selling, and so over 2025 and into 2026, there'll be thousands of Wall Street professionals, either salespeople, financial advisors, or marketing consultants that will be explaining the value of Bitcoin to lots of different types of investors: individual investors, retail investors, high net worth investors, family offices, institutions, endowments, pension funds, things like that. So I imagine over the next 3 to 5 years, there'll be greater adoption. And with that, because of the fixed supply, the very limited supply in Bitcoin, I think the prices are going to go up a lot. And I would imagine these things will grow into next year. But what I would also say to people is I wouldn't be overly concerned. I mean, there is some people that feel, well, wait a minute, this is a decentralized asset. BlackRock and Fidelity are central authorities. Are they going to absorb too much of the supply of Bitcoin, where Bitcoin becomes concentrated in centralized authorities? And I would tell people, don't worry about that. You know, BlackRock's got $26 billion of Bitcoin on a $1.3 trillion market capitalization, and Bitcoin's likely going up. You know, I could see Bitcoin at least trading to the market capitalization of gold over the next 10 years. And so that implies a 10x plus return from here. BlackRock, I think, will always be a relatively small percentage of the overall size and scale of the asset class known as Bitcoin.
Scaramucci delves into the transformative impact of stablecoins, particularly Tether. He lauds Tether for digitizing fiat currencies, enabling money to move as quickly as information. This innovation has revolutionized financial transactions, bypassing traditional systems like banks and credit card companies, which are burdened by inefficiencies and high fees. Stablecoins allow individuals to stay within the blockchain ecosystem, facilitating seamless transitions between Bitcoin and other digital assets. Scaramucci envisions a future where stablecoins dominate everyday transactions, from buying groceries to making business deals, marking a significant leap forward in financial technology.
When you think about a stablecoin, you think about the genius of Tether, you would want to have some type of denomination, electric denomination, if you will, of fiat currencies. And so Lynn Alden, who's a friend of mine, often talks about money never moved at the speed of light. If you had gold bars in a Wells Fargo stagecoach and they had invented the telegraph in 1848, the messages were going at the speed of light, but the money was moving at horse speed. And we've never really had the money move as fast as the information in a society. And I think one of the big innovations that Tether came up with is that they digitized the dollar, and now that dollar can move over the blockchain in a lightning sort of a way. And I think it's been transformative for the world. And it's also allowed for people to stay on the blockchain. So they can invest in Bitcoin, and maybe they want to buy some Solana, or they want to buy something else that's blockchain related. They can move money into Tether, if you will, for a period of time, and then out to other cryptocurrencies on the blockchain. And so this has been an amazing innovation. This has been an amazing piece of technology that Tether came up with that has helped the blockchain community, helped the Bitcoin community, but it's helped the world to grow. You know, at some point, we're going to have a Tether a unit of US dollar or perhaps a unit of a British pound, or you pick the currency, it'll be on our phones, and we'll be bypassing the credit card agencies and their 3% fees, or we'll be bypassing our bank in terms of wiring money to each other, and we'll be using this stable coin to transfer value between each other, whether it's at a restaurant or a business transaction, or I'm purchasing a car or a motorcycle. All of this is emanated from the innovations that Tether created 10 years ago. So, we, Skybridge Capital, entered the space before there was great regulatory clarity in the United States. And so we actually filed a Bitcoin ETF, a spot or cash ETF in 2021. It was rejected by the SEC. And so we were ahead of people. We started accumulating Bitcoin at 16,000, 17,000. By November of 2021, it went to 68 or 69,000. And then, of course, it crashed, a result of many factors, but one of which was the FTX debacle. And so we started, again, accumulating Bitcoin 16, 17, 18, 19,000. And so I would say just about every month since October of 2020, we've been in the marketplace buying some Bitcoin for ourselves or for our clients. One other interesting piece of trivia or fact about Skybridge is that when BlackRock started thinking about creating a Bitcoin ETF, they started with a trust, and Skybridge was the first $10 million of outside money in the BlackRock Bitcoin Trust, which got converted into the BlackRock ETF. So we were trying our best to lead our peer group into Bitcoin and get them educated and get them comfortable with Bitcoin. So first say that there's a publisher in the United States by the name of John Wiley, and they publish academic books, they publish trade books, primarily on investing. And about 20 years ago, they did a book that they called The Little Book of Value Investing, or The Little Book That Beats the Market. And Joel Greenblatt from Gotham Capital wrote that book for him. It went on to be a bestseller. And they said, okay, that's a cool idea. Let's write about a little book of gold. Let's write about a little book of index funds. Let's write a little book of hedge funds, which is actually the first little book I wrote. I wrote a book in 2012 called The Little Book of Hedge Funds for this publisher. I just came out with the second edition of that book because it's often used in business schools and in universities. And so the publisher came to me and said, listen, we don't have a book on Bitcoin. Would you like to be the author of the Little Book of Bitcoin? And so I called Michael Saylor. I asked him for some help. I wrote a 200-page book, but it's very small. You could read it in a couple of hours. It explains what Bitcoin actually is. It goes into a summary of the paper, a history of digital money, why there were some other products like DigiCash that didn't make it, why Bitcoin was able to scale and reach its escape velocity of where it is today, where's the regulation on Bitcoin, what does the future look like for Bitcoin. And I had Michael Saylor write the introduction for me. And that book is going to be out on December the 5th. And as you would imagine, the cover of that book is orange.
Scaramucci concludes by discussing his latest literary endeavor, The Little Book of Bitcoin. Written in collaboration with Bitcoin advocate Michael Saylor, the book offers a comprehensive yet accessible overview of Bitcoin's history, mechanics, and future potential. Designed to educate a broad audience, it demystifies Bitcoin's role in the evolving financial landscape and addresses common misconceptions. Scheduled for release on December 5th, this book aims to further public understanding and adoption of Bitcoin.